Yeah, the last couple of sessions we've been talking about technology, responsible and automated taxes, bridging the trust deficit between the large corporates and the tax department. And now we are here to spook you with the next one, the next session, which is tax investigations, the new norm. It's not that we've done this session for the first time, but we're doing this session with this intensity and seriousness probably for the first time. The last few conclaves have seen at varying degrees discussions around tax litigation, how do you handle tax controversies. But when we are talking about tax investigations, it's serious business. And when it's serious business, you need the top lawyers wearing their black gown amongst us. The next speaker, can I please request everyone to take your seats and request our organizers to please close the door. Can I please request that the door be closed? Can someone please close the back door, please? The next 5 years are not only the 5 years of technology, chat GPT and the likes, but it's the age for lawyers. When probably we started out with the conclave, we used to have a couple of lawyers address the conclave. And now you need a lawyer every second or third session. That's how tricky and complex and legalese the world has become. Our next speaker, L. Badrinarayanan, partner with Lakshmi Kumaran and Sridharan, handles some of the most contentious, tricky, complex, high-stake litigations for MNCs and large Indian conglomerates. He advises corporate clients, financial institutions, and corporations across a broad range of contentious situations in both representative and advisory capacity, from internal or regulatory investigations through to formal court or arbitral proceedings. He's practiced as an intellectual property lawyer in the US more than a decade back, and has drafted and negotiated IP licensing and cross-licensing arrangements. I have had the privilege of being on the same side as Badri on a transaction, and where I needed his advice. And trust me, they don't come much sharper than him. That time I realized, over a Zoom call with Badri on the same side, what a privilege it was. And my mind was, what would it have been if Badri was on the other side as me? That was a situation that I was not willing to foresee. Even today, if I ever have any doubt on anything considering any legal aspect of anything, my first port of call would always be Badri. 7-8 years back, there was a talk by former Comptroller and Auditor General, no, that was 12 years back, who had famously authored the 2G report, Mr. Vinod Roy. And I had attended that function, a talk of his, organized by Ms. Sucheta Dalal. And on the sideline of an event, I met not a stockbroker, but a friend of mine who used to be the research head of one of the top brokerages. And after the talk, I was just evaluating where are we heading as a country, as a society, so many scams and so many controversies. And he told me that in this country, if you have to survive as a middle-class person, I've never forgotten that sentence, and I've acted upon it. If you have to survive as a middle-class person, you should either know the police commissioner of your city or one of the top lawyers of your city. I do not know the police commissioner, but I do know Badri. So I can sleep peacefully at night. Badri, tax investigations, the new norm, we are all ears to you. A big hand for Badri, please.
Thanks, Arun. I think I always feel embarrassed when Arun starts talking because he always exaggerates much more than he needs to. But that's what friends are for. So somewhere he kind of gives something back. Okay. Obviously, we're going to talk about a topic which I think no one is interested in listening today, correct? No one wants to know about tax investigations. No one wants to know what is this new beast which is there around the corner, and how it is becoming a bigger and bigger issue for all of us. But I thought that every year I've kind of come and spoken about some interesting topic which has been piquing my curiosity. But in the last 12 months, one of the major areas which has kept coming back to me is been investigations. And I thought I'll talk a little bit about what it means for companies in a gathering of this nature for investigations. We've had a great couple of years despite COVID when it comes to M&A transaction, private equity, VC. We've had a huge amount of investments coming into the country. We've had a good run when it comes to infrastructure development. We've had a good run when it comes to various other developments. But I do believe that world over, the next few years are going to be dominated by the results of the things that have happened over the last few years in the form of regulatory authority, tax authorities, and other authorities kind of coming back. I won't say with a vengeance, but with some serious firepower when it comes to investigation. And we're seeing that already. When I speak to my counterparts in the US law firms, in the US tax firms, they had a great run with M&A and investments for the last few years. But today, the most busy groups in these firms are investigation, SEC, tax, IRS, white-collar crime, and other kind of investigations. Today, we're going to focus a little bit about tax. Though I've called it tax norm, I'm going to talk a little bit also about related regulatory areas which are coming quite closely with tax when it comes to investigation. So that's really where we are going to be heading today. And what I say is not something which is new. So I just want to give some statistics just to kind of get everybody back on the same page. And these are not stuff which is just like that made out. These are actually statistics that we have seen from public sources put out for the purpose of being able to do that. So let's kind of look at this. Income tax, there's been a serious increase in the amount of investigation which is going on for the purpose of being able to collect. Many of these investigations are industry-wide investigations rather than specific issues. So while we are seeing a reduction in the number of disallowances and issues from an individual return perspective, we're also seeing a very huge increase in actual investigations which are across the industry on specific issues. And we'll talk a little bit about that a little later. GST, just to give you a sense, the kind of amount which is in play at the moment when it comes to investigation has crossed 1 lakh crore, 1 lakh crore as on 2023. We're having these huge cases which are going up. One of the most areas which are kind of a place where ED, and I'm going to talk a little bit about ED and tax in this because I really feel that for people who are in this room, don't think of yourself just as pure tax, direct tax, indirect tax. ED PMLA is a very, very important part of what we are doing. Please understand that some of the offenses which are there under customs, for example, is also an offense under PMLA. And we are seeing more and more of these overlaps happening between tax and PMLA. And if you get into PMLA, there are some serious problems which are occurring at the moment. And just see the number of searches conducted by ED between the 2 decades that is there. Okay, I think the first decade is UPA decade, and this decade is our decade, the new age decade. And there's been I'm not talking in 100%, 200%. We're talking about 2,500% increase in the number of searches conducted by ED. It's also a reflection of how much the country has grown. It's also a reflection of where as a society we have kind of, whenever we have kind of taken growth as an important factor, as a measure of success, okay, which is what is there today in most companies, you do end up having issues which are coming up in this manner. Okay. But the more worrying thing is that especially in areas like PMLA and I suspect in places like GST and customs going forward, the conviction rates are very, very high. Okay, we are seeing some serious convictions, some serious arrest. It is not to put any dampener on your lunch. Okay, it was never the purpose. But I think there's some serious issues going on when it comes to investigation. And this is, like I said, this is not something which is only to India. When I recently met with my colleagues and associates that I've worked with in the past, in the US, in the UK, in Europe, we are seeing the same kind of a story. So just to give you a sense, we saw in the fiscal year 2022, the IRS in the US kind of initiate more than 2,500 criminal investigations and identified about $31 billion as something which is in the pot when it comes to tax avoidance. We are seeing similar things in the UK. We are similar seeing in Europe, where in Europe we have seen the biggest tax fraud which has been unearthed, and that tax fraud was upwards of $2 billion, and it is getting some serious relook into how, for example, some of the policies and the processes are getting implemented by companies. And many of this is actually getting pushed in by the fact that there is a huge requirement for growth, and also because the laws are getting complex, and we are getting some serious issues with respect to how some of the tax authorities, potentially because they have more access to technology, they have more access to information, and they probably today have some serious firepower to kind of come back to all of us. So tax technology, very, very nice, but I think it's also having some other implications. But this is where we are currently, whether we like it or not, as a climate for tax. What's really happening also in tax is, like I said, there are some very interesting developments that we are seeing. Okay, today, for example, the tax authorities, there are, of course, one-off investigations which are when it comes to actual, say, removal of goods without payment of tax, or black money being involved from a specific point of view where you've been caught out, or there has been a procurement of a diary of someone who kind of says that so-and-so has been paid cash and things like that. But more and more I find that these investigations are almost a coordinated investigation at an industry level. Okay, and I'll give some examples of what I'm seeing for the purpose of doing so. And some of these are quite hard to kind of work with and do that. So for example, I've given some examples of what's happened in some of these areas. So for example, we all of us who have been in this sector know of the fact that, for example, how investigations in electronic goods, insurance, banking, EV, electric vehicles, they're having some serious problems right now with respect to that. Online gaming, we've had the biggest GST case in online gaming, and there's some real impact on that. Real estate, healthcare, and edtech. And edtech, I mean, any sector that I'm seeing where there is some scope for tax structuring, some scope where there's been investment, we are seeing some fairly serious investigation. I'll take a couple of examples just as may of anecdotal notes, and why, for example, I feel that there's been a real change in the way you kind of look at this, and many of us probably we now need teams of probably accountants and lawyers who are going to have a broad base of being able to handle across the board different kind of investigation, rather than just being able to focus on a particular type of investigation. I'll give an example of, for example, mobile manufacturing. Electronic goods I put as the first. I'll give an example of mobile and see how such an interesting thing and occurred over the last 10 years, we see as a decade. I don't know, about 15 years ago, I don't know if any of you are aware, Ericsson brought litigation under patents against a series of Chinese and Taiwanese and other electronic mobile manufacturing companies. Okay, what happens is that in the telecom sector, you have to follow standards. Standards are patented by companies like Ericsson, Nokia, and others, and they have something called standard essential patents. Okay, so these standard essential patents, once you get it, it becomes a royalty for life. So you get it for 15 years, and they keep filing patents on these. There was huge litigations for enforcing these in different countries, including China. So 15 years ago, when they went to China to enforce these standard essential patents, they lost in China because the Chinese courts said that we will not take these patents and enforce it against our own manufacturers. So what they did is that they used a customs procedure in India and in several other countries for the purpose of being able to enforce standard essential patents by saying that they took advantage of our IP rules, they took advantage of our customs rules to kind of enforce standard essential patents by filing cases and being able to attach and confiscate these electronic goods which used to come into India. So they left China, they went to all these countries. Then there was a big negotiation which happened between these countries, between these companies, and they finally decided that they will pay royalty to the different standard essential patent manufacturers like Ericsson across the world. And this was a global deal, and the deal was being done by the companies in China with Ericsson and other companies. So this is what is happening from that perspective. I'm just an example. Now, going forward, we had a situation where some of these Chinese companies imported and manufactured these goods in India, and the Chinese arm started sending royalty to Ericsson and other companies from India. So far, so good. You found the standard essential patents, there's an obligation to pay, you set up in India, you make the payment. Now see how this thing is getting complex. On one side, these mobile manufacturers now being investigated in a thorough manner by all the authorities. So earlier what have happened, the income tax authority looked at what is the royalty payment being made, whether it is fine from a transfer pricing perspective or not. But see how this thing got played out. What got played out is it suddenly became a FEMA income tax customs kind of an issue. What the customs authorities to start with say? They started off by saying this is a royalty that is paid, which has not been added to the value of the goods imported. Therefore, custom duty needs to be paid by including the value of royalty into the value of into this. So that starts off as being a customs matter. That we are trying to handle that. Suddenly, it becomes an income tax come FEMA issue, because suddenly the FEMA authorities are coming and saying that this was never your royalty to be paid. This is a payment which was to be made between China and whatever, Denmark or wherever they are, okay? I think they are in Sweden, if I'm not wrong, and these countries. This was something which was not to be paid. You have paid on behalf of them. This is in violation of the amounts that should have been paid because it's never your liability to pay. And therefore, we are going to say this to be a FEMA violation. The minute that happened, the income tax authorities are coming and saying that if FEMA says this is not your liability because the legal documentation says this, we will disallow this expense in your hands because this is not an expense for you. And therefore, we are not going to do that. So see this. So one small issue, especially in the area of royalty, you look at it and suddenly you find that there is a three-prong attack. And suddenly, under ED, they attach a very large amount of money. To give you a sense, one of the mobile manufacturers was attached more than, Vasu, 1,500? 5,000 crores worth of property. And they've been going to High Court to try and get this release, still not done. Okay? So we suddenly find that some of these, because of the ballooning effect of different authorities taking a look at it, we are suddenly having this very, very difficult position of having to do that. And the problem also is that once you get into something like this, these investigations, even if it takes a long time for the investigation to close. That's something which is part and parcel of the game. But there are a lot of second order effects post-investigation. So for example, I'll give you an example. One of the companies, a Bay Area, Fortune 500 company of big repute at one point of time, had a customs issue 15 years ago. Okay? Show cause notice issued, matter pending in tribunal. This was matter pending since 2008, 2009. Okay? Where in 2023, their imports have been provisional from 2009 onwards. Just think about the liability that they're going to be on. Okay, they're importing these goods. They don't have clarity with respect to what the valuation is going to be. They bring these things in, and then they are having to have a situation where for another 15 years, they're just waiting for some court to be able to decide, and then for the department to come and take it up, and then finalize on provisional basis. So it has an impact directly because you're having to suddenly deal with 3 or 4 authorities at the same time. Second, the minute you're dealing with these 3, 4 authorities, you're going to have to, whatever time it takes, continue providing the information and close the investigation. And post-investigation, you're having these huge impacts for the purpose of being able to do that. So really, I think it's having, and what we as lawyers are seeing is that earlier we used to just go as GST team for investigation. Okay, we used to go as income tax team for investigation. Now we are really having to go as an investigations team for your company, where we are going to be looking at ED, PMLA, we are looking, because what other thing we are seeing is that any position you take in any of the one laws, it's now having an impact on this. You take a position in customs, it's having an impact on transfer pricing. You take a position in income tax, it's having an impact on FEMA. You take a position in FEMA, it's having an impact on customs. So we are having to take a lot more uniform positions, and therefore there is a need, and I'm going to talk a little bit about how I think companies should start looking at it going forward. We are seeing some, obviously, areas of investigation in the areas such as tax treaty benefits, foreign investments, valuation, and so on and so forth in income tax. But again, we are also seeing in other areas some fairly complex issues in customs as also in ED. So this is something which as companies, we need to recognize and start working towards and start putting certain things in place. Because what I find very interestingly is that there's a tremendous impact on the psyche of the company and its key managerial persons the minute an investigation starts. Okay? We recently had a situation where an investigation was started against a big Japanese company. Okay? And we had a new CFO who joined the company. But within 3 months, he decided that he would not want to continue because he was being summoned for this investigation for a period which he was not even involved in. Okay? And how do you kind of explain that to this thing? So we need to have certain processes and systems for the purpose of handling that, but it has a huge impact. Okay? And think about it. Earlier you would do a particular investigation from a particular state, but suddenly if you have 3 or 4 authorities, we are having that. We had that in insurance, for example. We had a situation where we had a GST issue where they were, the best part, you pay the tax, you take credit, you deny the credit. Once you deny the credit, you deny expenses for the insurance side. And then you start getting into IRDA and other kind of regulations and keep going on. So you suddenly find that the entire focus of the company is now in trying to find a way of being able to close this. And there are no real kind of answers with respect to any closure. And the longer the investigation continues, more time and more issues start cropping up in these. So we have an issue with respect to key resources, key operations, impact on key managerial persons. It has a huge impact on people who want to continue, who don't want to continue, who are going to be called. Some of them get called post them not being with the company also. Okay? And then, of course, second order impact. Okay? It has some fairly strange issues, like I said. Some of the existing benefits are taken away, some other issues are taken away. We had a situation where we advised one of the companies, which was undergoing, again, an investigation which was both in the previous regime excise, income tax, and in this thing. They went to the amnesty scheme, cleared up the amnesty scheme, paid taxes, only to find CBI now getting involved and saying that we are now going to reinvestigate the entire proceeding. So there is no real closures on some of these investigations. You have to be mentally prepared, but it has a huge impact on the psyche of this thing. What I want to touch upon quickly now is what's really going on in terms of the legal principles. Where are we with respect to this thing? And this is not a session where I'm going to talk to you all about it. Vasu and others will be more than happy, and we will conduct. And we regularly conduct now sessions for boards, for key managerial persons on a regular basis on how they need to get ready for investigation. And there are some serious principles that we all need to follow. And I find that 75% of the companies that I go and talk to, they take it that when it happens, we will see, we have the process and systems in place. But I think this needs to be part of a regular kind of a thing going forward. But kind of look at it. I really feel that one of the big challenges that we have is that I find that, and again, this is with all my humility at command, I really feel that the courts are getting even more unpredictable than they were previously. Okay, so 15 years ago, we had a very good idea of where the courts are going to fall on certain issues. But I feel in the last 5 years, especially, okay, the fact of polarization, I think, has reached the highest levels of our society, including our courts. And I find some fairly polarized views which are starting to come across the board. So it's making it more difficult for us to be able to identify. We are seeing this. On one side, we will see some very strange judgments. We had some, those of you who know, we've had some strange decisions in the tax areas where we felt as lawyers predict a certain kind of an outcome, but we've seen an outcome totally different. Okay, we have seen the courts re-engineer the laws in order to either provide benefit or to be able to provide some kind of a catch. And that's something which is getting more and more unpredictable from the perspective of being able to. We still need to prepare, we still need to put our foot forward, but I feel like, for example, earlier we could tell that if a Supreme Court judgment was passed in a particular case and someone filed a review against that judgment, it will get dismissed in the chamber in 15 days' time. Okay. Now, these review petitions are taking 3 years to get decided. So, there's a lot more unpredictability even in those. And we know some of those areas where we've had these kind of issues. We're also seeing, on one side, the courts can be quite harsh on the tax authorities when it comes to things like egregious arrest, where they've gone beyond their limits with respect to that. But at the same time, we also find very similar courts and very similar judges also upholding the powers of arrest, upholding the powers when it comes to summons, upholding the power with respect to investigation. So, for example, when you look at this Vijay Madan Lal Chaudhary case, we saw that PMLA, whole host of powers have been upheld by the courts. Okay, so that means that the courts are also not believing what the assessees are saying. There's a kind of some kind of a what I call as unreliability when it comes to what the assessees are saying. At the same time, they also recognize that what the department is doing may not be correct. So, for example, if you take some of the judgments that have come on income tax, on assessment and reassessment, okay, we may not agree with some of them, but there are certain principles being laid down which basically say, so again, as a pendulum, it says that if you don't find any material which is incriminating, you cannot do a reassessment. But the lower authorities keep pushing the envelope on that, and we still see a lot of issues when it comes to that. Other thing, I mean, the courts have said it, we've seen the provision, income tax, there are no provisions with respect to arrest. But even today, for example, in some of the areas where we've had these investigations, insurance sector and other sectors, I still get promoters, especially older promoters, coming and saying that, Badri, can you assure me that I will not get arrested? Because I've not done anything wrong. I've done what the insurance companies have told me. I'm an intermediary. I have no play in this. But I'm worried that I might get arrested. I'm getting these coercive kind of threats from that. So even though we have these laws, because they are so complex, because these laws are getting interlinked and there are these stories in press and there are GST arrests and other things, there's a huge problem when investigation starts with respect to promoters and for key managerial persons, even if I tell them that there are no provisions with respect to arrest. We are seeing this as a real kind of an issue with respect to that. So, all of this is good. We've got the law sorted. We've got this thing. Of course, I wanted to finish with ED because ED is this thing. Again, we have seen that powers with respect to PMLA, again, quite wide-ranging, and they have the ability to impose far-reaching penalties and consequences. Okay, I feel we need to be very careful of where some of this is going from that perspective. But let's kind of come to what we need to do and how do we go from here. And this is not like I said, today is not a day to kind of counsel you on what are your rights and duties with respect to investigations. This is to give you a perspective on where it is going and how you need to do that. I really feel that when I speak to companies as a lawyer, okay, as an advisor, and I talk to them about their transaction and investments, and that's really been my role over the last few years. I feel that the companies think of investigations, one, like we take our, when we do our diagnostics and we have to go over 1 year in a year health checkup, which we do without really thinking about it, that it can't happen to me. It's something is going to happen to someone else. My process and systems are fine. I need not think about investigation because I think I'm fine, and there's no way some of the stuff that is happening is not going to be a problem for me. I feel that psyche needs to change. We need to have a regular tie-in, and I feel as an organizational change, especially in companies, you have to start thinking that investigation, especially if you're going to be successful, is part of the journey, not an exception. Okay, what does that mean? What that mean? I really feel that we need to rethink the people composition. Okay, I really feel that today we think of companies from a business perspective, but right from the board to the key managerial persons to the operational people to the lower level, we really need to rethink company strategy with respect to how we are hiring people for doing. We hire people for doing business. We don't hire people for handling issues which are coming out of this. So people who are experienced, who can kind of handle some of this. Do you have people in your organization who are strong enough to be able to withstand investigation? Is your CEO, apart from being a genius of a marketing person or genius of a business person, also able to withstand an investigation? What do we need to do? And we may not have the people, but are we getting them trained? Are we getting them ready for the purpose of doing that? I do feel that many companies, we talk a lot about technology, talk a lot about data, but when I go and ask for data from companies during investigation, I still find a lot of errors, a lot of issues. I think we're still on a journey. I know many companies cannot do that. I really feel that strengthening some of the data and information frameworks that are there in the companies will really, really help. And we need to keep kind of assessing this business versus risk and compliance kind of a story. I find that, for example, some of the companies, more mature companies, Indian companies, tend to have, even though they may not have the kind of frameworks, they tend to provide better data and are more coordinated, while multinational companies who spend a lot of money on risk and compliance are still not able to kind of come to the standards which are there. And I think that really needs to kind of think through for the purpose of being able to do that. Other area, the longer the investigation is going to go on, the more issues you are going to have. So some of the times it's about getting that information in and kind of moving it forward. I find that a lot of the time, the first thing is I will not go for the summons. I will not provide the information. I need an extension. Of course, many times we as lawyers are also at fault. Okay, but I'm just saying that I find that it's taking longer and longer for companies to be able to provide this information in a manner which is going to be there. And last but not the least, there has to be a mindset for preparation for the long battle and finding ways by which you close the investigation, at least on aspects that are going to have a huge impact, and moving it forward, rather than keeping things indecisive. What I meant is, sometimes you need to take judgments during the investigations to close issues. Okay, I think this is something where we made a mess. Let's go ahead and pay this tax, or let's find a way by which we close this, and we are able to do that. Remaining stuff, we will see how to fight. I really feel that today, during investigation, at least in the last few years, I find that it is possible to have the discussion where we are able to ring fence the investigation rather than letting it out of the hand. And I find that sometimes we do it, sometimes we don't with respect to that. Anyway, all is not bad. Okay, so as lawyers, we are never invited to seminars because we give sessions like this. And people who want to talk about good things in life don't want to talk about lawyers. The doctors and lawyers are the last people that you want to talk to, correct? We don't want. But I think what I feel is that the next 10 years are really, really good for us. Okay, I really want to leave it at a good note. The way I see it, and I was talking to Mr. Lashmikumar the other day, he said that he has seen these kind of cycles now 3 times or 4 times. And he says these are always cycles. And just like in any company's life, these happened. He says more like a Meru Manthan. I don't know, for those who have kind of heard of this story, where you have to get Amrit. So you have to kind of put the Meru mountain and kind of do the churn. Pehle vish aata hai, uske baad hi Amrit aata hai. So he thinks more of in that manner, that these are things that if you kind of get it right, you'll be able to take it forward. The key thing is to kind of stay the course, to prepare for the best. And of course, we all need a bit of a prayer to take it forward from here. And that's what I have to say about this. And thank you so much for patiently listening to me. Thank you very much.
Thanks so much. Yeah, I know Neetu has a question, but Neetu, we will come to you. Badri, I'm shooting first, and I'll take just 30 seconds. An ED investigation can obliterate a company. It can, or any of these investigations, because as you said, it can be a long haul. And I'll give one example in 10 seconds. There was not any of these investigations, but an ICAI disciplinary committee a hearing, and it had gone on for 10 years, and they finally held my friend guilty. And we said, what do? We went to the High Court, got 2 hearings in 4 weeks, and got the institute order stayed for 8 weeks till we appealed to the tribunal. I mean, 10 years an institute can take, and it can destroy the life of a chartered accountant. This was 1 month back, and luckily we had a good judge at the Delhi High Court who really took the institute's counsel to task, and I was there at that video conferencing hearing. I think one thing that Badri did not tell you is to get your lawyer right. Trust me.
I think
actually,
that,
I'm telling
Arun,
it very seriously. My question, Badri, to you is...
Arun, before you finish, I thought the whole, after this session also, if they don't understand who the right lawyer is, then there is a problem. Huh?
But Badri, on a serious note, the question here is, during these investigations, do you see the CEOs or the CFOs or any of the concerned C-suite people, do they have the gravitas, or do they strategize with you when you sit with them, or they are completely outsourced to you saying that, okay, you handle this?
No, we get all varieties, okay? I think we get some CEOs who are really hands-on and who want to get it. And there are some CEOs who really see this as something which is a function of the CFO or of the concerned person. So we get all varieties, and there's no right answers to this. So I think definitely there is no differences with respect to that. I think, like I said, the key thing is, see, you have to understand it's a company and what its ethos and its principles and its processes are. I don't see that to be a problem.
Badri, how much of a pressure do you have during a legal strategy? I mean, an example, like you gave, summons. When you have to advise the promoter whether to attend the summons or not, there is a live case, one of the largest companies in East India. The promoter got ED summons, and he decided not to go on that day, and he's really, really paid for it. So I'm just, how do you decide when you advise the promoter what to do? How much of a pressure do you have to get? So
I'm
it right?
a bit of I'm a bit different from the usual chartered accountants, and sorry, not in any wrong way, other lawyers. My first is always to kind of go and attend the summon. Okay, unless, so here is where it is. So I always believe, so a couple of things. One is, where I get the pressure is when the CEO or a promoter or a CFO calls me, and usually it is late in the night, okay, and says, I've been asked to come next week or this thing. The pressure is to be able to take a snap decision on whether this is going to stick in court or not. I think that's the perspective that we are able to bring on court. So if I take this court to the High Court, is it going to give me a stay? And in the long term, am I going to win on this issue or not? That's really the judgment call he's asking me to do. Once I've taken a decision that there is a 70% chance of success, and usually in most cases there is, I usually try and say, I think you should go for the summons. Don't avoid it. It causes more problems than that. Don't go for the second one, third one, fourth one, we will see. But first one, let's try and see what we can do. Or we tell very clearly, we're going to come after preparation. But my sense is, don't avoid not going in for summons. Key is being able to take that decision and then back it up with data. And that's typically what it is. That is one aspect of it. Just another aspect which I thought. Many times after investigations are over, I become the custodian of the information. So for example, there are classical situations where you go and meet a lawyer and you brief the lawyer on what the issues are. Now, post-investigation for many companies, the client comes to me and said, can you please tell us what was the issue in the investigation and can you please brief us? Okay. So what is happening is that you need to have a system by which the custodians continue to remain in the company or not outside. You understand what I'm saying, right? There are situations where today I have people who are coming and saying, I gave a bill of entry as per what my thoughts 15 years ago. Can you please retrieve and give it to me? Okay. So what is happening is that we are having this issue of not having post investigation handling, because there's so much of chaos in the company and lawyer seems to be the one who's holding the file. He seems to also continue holding the custody of this. So I think that's again something which needs to be addressed by companies going forward.
One word answer, last question. Have you seen any of these, some people thrive in adversity. Have you seen any CEOs, CFOs or any of these companies who said, okay, we'll take it head on, we are enjoying this?
We did see one person, I think he was in Sun Microsystems many years ago. Vasu, correct now? I really enjoyed working with him. And there are a couple other companies also, but I should say this specific person really kind of, he didn't have to do it. He was a CEO or CFO? CEO. He was brought on board. The way he took it on and the way he went about it, he really would go and sit in the court and say, arrest me, come, you arrest me now. I will tell you what is going on. This is what according to we've done. This is the data we have. If you are still not happy, you arrest me. My lawyers will get me out on bail. No problem at all. So we really had, I mean, the department got spooked out because beyond that, what can you do? And if he's confident, and I'm sure he saved a lot of money for the company by being able to take that position. But that's what something I saw many years ago. That of course, there are instances like that. We always have heroes, okay, and we always have champions. But I think the key is, just it should not be left to the individuals. It should be a process and it should be a system. And I think many companies in India don't focus on that. We focus a lot more on business, M&A, investments, growth, things like that, customer acquisition and things like that. I think the poor lawyers also have to be thought of and taken care of.
A big hand for Badri, please.
Thank you.
Big hand. Badri, always a delight to be listening into you, and I think a lot of you all now know why Badri is my first port of call. But trust me, they say keep your friends close and enemies closer. So, Badri, I keep you close, not closer. The next session is on M&A hot trends, and I have another dear friend of mine. So, I'm lucky in many respects that they say that when God does not endow you with certain things, I may not be the richest person here, not by a long shot, but He's endowed me with some great friends. Badri on the legal side and Girish on the M&A side. Girish, founder of Transaction Square, Girish Vanwari. Girish is synonymous with mergers and acquisition. Almost 3 decades of experience, KPMG India tax head, then the Transaction Square journey. Is there anyone here who does not follow Girish on LinkedIn? Can I see the hand? How many here do not follow Girish on LinkedIn? If you do, you would identify with the slogan KKTS Kona Kona Transaction Square. Transaction Square is one of the go-to firms for M&A. Girish is the founder. Girish, what a pleasure it is to be listening to you. Girish advises on some of the biggest M&A, some of the biggest corporates. And if there is a structure that Girish does not know about, that means that structure will fail the smell test. Girish, over to you. We are really excited to be hearing you, and a pleasure to be hosting you at the Taxsutra Conclave. And he is also one of our regular speakers. A big hand for him, please, Girish. Thanks, Girish, for specially flying in from Mumbai. Really honored. Grateful, Girish.
What I'll do is, this is, how do you change the slides? Sorry? Green one. Take it. What I'll do is I'll just summarize the key happenings, the key issues being raised, the key watch areas, the key issues. So many people ask me that what will happen to M&A? Will M&A grow? Will it go down? Will it go up? And clearly what I feel is that as long as India grows, mergers and acquisitions will happen, money will flow into the country. So now also if you see a lot of money is coming in renewables, in infrastructure, in different kind of assets. So money will flow, and within India also you'll have consolidation, HDFC Bank, GSK, Unilever, you'll have consolidation. Big will become bigger. You are seeing it in the unicorn world also, but you will see consolidation happening. Axis acquiring City India's assets, you will see consolidation happening. So M&A is here to stay. That's my first thing. Second, if you see, all of us in this room are, as we spoke in the previous section, everything is integrated. All of in this room Some may be tax, some may be CFOs, some may be different professional capabilities like lawyers. But really, when you look at an M&A, when you look at a transaction, you look at a multidisciplinary thing of everything. So if I have to just look at the tax issues like how much tax will I have to pay, how much is the tax deduction I will get, how much is the amortization of assets which I will get, how will I look at the neutrality if I'm doing a merger, how will GAR be looked at? Now doing an M&A, imagine just to save taxes is archive thinking. I mean, it was 10 years back, people did silly things just to save taxes, but there has to be a business driver in everything you do, whether it's internal restructuring also. So really the tax issues, how will you actually go out? Like, I see crazy ideas that merge A into B, but A may be very, very intense in licenses, permits, in various kinds of approvals. So how will we actually merge? How will we actually make sure that we transfer the various things to the merged entity? And really, how do we harmonize policies, HR, IT, all systems? How do we harmonize the integration? How will this whole thing work out? So it may just look to be a good idea, but how do you actually pull it through with the integration of it? Regulatory approvals, they all go together. SEBI, CCI, NCLT. For example, I had cases in COVID where NCLT approvals took 2 to 3 years. Then what happens in that interim? Like, how do you do your returns of income? How do you pay your taxes? How do you pay GST? So on and so forth. CCI, now we have to get CCI approvals for 2,000 crores worth of transactions and above. So the process of CCI, the process of SEBI, how do you integrate all this in your decision making? What may be good for tax may not be good for an interpretation in SEBI. What may be good for one law may just hurt the other laws. How do you integrate this whole thing? How do you look at property, especially when you have MIDC, where you have specific, concessions granted on properties? What are the charges to pay to have that property transfer, so on and so forth? So really, you really have to think through telecom regulations, RBI, IRDA. It's just not tax. It's just not FEMA. It's about the whole thing. Valuations are very, very important. You cannot do anything which is not right. I don't know whether you all deal with SEBI. I mean, now when you're doing a merger scheme, SEBI itself goes through the process of scrutinizing the valuation. So for example, if you're merging a related party company with your company, previously one used to say that, okay, we will get a majority or minority approval. That's the approval needed. So people used to say, SEBI will give data, SEBI will approve it, but we'll go for majority or minority approval. And if we convince the minority, the whole thing is approved. But now SEBI goes through all the data itself. And I know cases where SEBI has also rejected valuation reports. They've told clients to go out and do another third-party valuation to get convinced. So valuation smell test, what is not as per the market price, what is not as per rightness, is something which one has to be very, very careful. And then there are issues like, transfer at book value versus fair value, 11 UA value, how do you compute 11 UE value, how do you marry the, you want to sell a property which has a wrong stamp duty value in the stamp duty record, how do you transfer it if you're not getting the price for it, so on and so forth. And there are deeming considerations also. Like I had a case, when you're buying assets for less than fair value, there is a question mark as to how is the deemed gift computed. So buying of shares at less than 11 UA value is a deemed gift. Buying of listed company shares other than share listed price is a deemed gift. Buying a business as a discount is a deemed gift. God knows, because business is not considered in the definition of assets for gifts. But if you ask me, the spirit of it is anything coming at a discount, you cannot not stop the logic of it being extended. So, to say theoretically that, business is not gift, do whatever you want, you will end up in trouble if your 11 UA is wrong. So how do you marry the various considerations? And there is accounting. How will your accounts look like? How will the intangibles come up? How will we make sure that, the impact on EPS, impact on ROCE, how will the lenders look at? All that stuff also needs to be very mindfully thought through as one goes through this whole thing. So all in all, you have to look at many, many things. Is it too complicated? Answer is no. What is required is sensitivities to all the factors, and what is required, as you said, is substance over form. Like nothing which is going to pass substance test is going to pass any of these musters, any of the regulations, and any of these into place. So really, I want to focus my experiences on some broad themes. First is, I want to focus on slump sale and itemized sale. So M&A, slump sale, itemized sale, slump sale, lock, stock and barrel, everything gets transferred. Employees get transferred, assets get transferred, licenses get transferred. What happens if something doesn't get transferred? What happens? Is it still a slump sale? What happens if I don't transfer land? I just lease out the land. Is it still a slump sale? Yes? What happens if I transfer some liability, some I don't? I pick and choose my liability. Is it still a slump sale? What happens if I don't transfer working capital? Some people say, I'll collect all the debtors. I will liquidate all the stocks, but the business belongs to you from tomorrow. Is it slump sale? Depends. So, what happens if you do a working capital adjustment? Like, I list down assets, liabilities, and then I say that, in the future, I will make an adjustment to the price. Is it still a slump sale? More questions. So the question is subjectivity. Subjectivity. What is slump sale? Transfer of business together. And what is important to run a business? All these assets together. So really, it's a very judgmental call. What happens if you have deferred consideration? That I'll pay you X today. If your profits come tomorrow, I'll pay you Y more and Z in the fourth year. What happens? Do you pay all the taxes upfront, or do you pay taxes when you get the money? Any answers? Sorry? Transfer happens today. But I can estimate the contingency. Transfer happens today. How your agreement is. So again, no answers. No answers. And there are case laws both ways. There is a Delhi High Court decision which says you should pay taxes when you get the money. There's a Bombay High Court decision which says you should pay the taxes upfront. So it's, what I'm trying to say is that something simple as slump sale is as complicated as this. And then you put the itemized sale, slump sale, itemized. Some cases, there was a unique case of Mahindra's in which case, suppose I do 9 agreements. Suppose I do 9 or 10 agreements. I do one agreement to sell the building. I do one agreement to sell the brand. I do one agreement to transfer the employees. I do one agreement to transfer customer contracts. I do one agreement to transfer technology. And then all 9 are linked. Is it slump sale or itemized sale? But all 9 have different considerations. Huh? Is it slump sale or itemized sale? Yes, but is it slump sale or itemized sale? But 9 agreement, not for a lump sum consideration as we see it. Sorry? Correct. Mahindra decision said that this is slump sale because it's all linked still. Though the form is 9 agreements, but they all are linked. And now put this, there are some cases where people want to call it an itemized sale because when you call it an itemized sale under Section 50, you have a better treatment. So if you call it an itemized sale, the tax office has pushed back and say it should be slump sale. There are some cases where I see that it is slump sale for GST, but it is, okay, is GST payable on itemized sale? Is GST payable on itemized sale? Yes? Yes? Though it's transfer of business. Correct. Correct. So you marry the slump sale, you marry the GST implications. The more you are stronger on slump sale, the more stronger your GST position is. To take a contrary position that it is slump sale for GST and not slump sale for tax is difficult. It's very, very difficult to see how it goes. Now look at the other things which I want to talk about. I spoke about the Mahindra decision. Share transfer. Share transfer, very simple, no, sounds very, very simple. You transfer shares. You transfer share, pay capital gains tax. Nothing much you can do. You have to pay your taxes depending upon your cost base. But if you're doing shares of a listed company, SEBI takeover code, disclosure requirements, on the stock market, off the stock market, pricing norms for FEMA, stamp duty payable, if it's unquoted shares, deemed gift implications, 50CA implications. Look at one transfer of shares and there are 8 issues I can think about. And assume that the transferor is a US citizen. If a transferor is a US citizen, US implications. If a transferor is an Australian citizen, Australian implications also besides the Indian implications. So the issues are getting more and more integratedly complex, where marrying of law is very, very important with the outcomes you see. And the credit mechanisms, the whole way the whole thing moves. Now, then I talk about mergers. Mergers, carry forward losses. You can transfer losses only in case of mergers. And mergers, you can transfer losses when you're manufacturing, computer software, power, telecom, ships, aircrafts, rail systems, so on and so forth. The question is that if you are a service company, will losses get transferred in mergers? No. Then you see clever advice. Don't do a merger, do a demerger instead. What you do is demerge the business. With the demerger, losses get transferred. Is it good advice that you have one business, which is service business? Now the advisor is telling you don't merge, do a demerger, and in the demerger, transfer the losses. Is there a commercial rationale of this? Is there a commercial rationale? If it is a real demerger, if you have 3-4 businesses, demerging 2 of them, absolutely fine. If you have one business and you're creating an artificial business, making 95% demerge, 5% not demerge, absolutely ridiculous, playing into the hands of GAR and playing into the hands of investigations. So clearly, anything which breaks the spirit of law to convert one transaction into another should be please avoided. Unless there's a commercial rationale, there's a real reason why you want to do this. Otherwise, please don't play with fire. That's my sincere recommendation. So half the people I experience who land there in investigations are the ones who have taken that chance, which is not required in today's environment. I mean, absolutely not required in today's environment. This is, now I'll come to this point again. GSK Unilever was the first case where goodwill was claimed as a depreciation in tax. What happened is GSK merged into Unilever. When the merger happened, a goodwill got created of $3 billion, and this goodwill was claimed as a depreciable asset based on Smith Securities. First case. And they made transparent disclosures about it. They didn't hide and claim it. They said, following Smith, we are doing it. Now, Smith has got overruled. The Act says you can't get goodwill depreciation. But the question is that other intangibles are not covered. So if you have know-how, if you have contracts, if you have IPs, brands getting transferred in a merger process, can you claim depreciation on that? Because Smith has got overruled only to the extent of goodwill. Can you claim depreciation on the other intangibles? Yes or no? Technically, yes, but will it pass through? If you don't pay advance tax, don't do disclosures, will it pass through? What's the intent of law? What's the intent of law? Will it pass through? Technically, yes. Technically, somebody will give an opinion that you can claim, but will it pass through? What's the intent of law? Will it pass through? Be careful. Take a judged call. Don't, especially when you have penalties and interest behind it, just take a very judgment call whether it works or doesn't work. Can you demerge investments? Can you demerge investments? So let's take an example. Let's take an example. You see this case. Nuvo had 100% of ABCL, which is Aditya Birla Capital. This is the case law. And what they did is they merged first Nuvo into Grasim, and then they demerged the financial service business of Grasim into Aditya Birla Nuvo, which is Aditya Birla Capital listed now. Is this doable? Can you demerge an undertaking? So suppose if I am a pharma manufacturer, I do 100 crores of turnover in pharma, and I also own investments in pharma worth 1,000 crores. If I demerge 100 crores of turnover and 1,000 crores of investments, is it demerger of pharma business? Yes or no? Yes or no? Yes. Suppose if I demerge 1 crore of pharma business and 1,000 crores of investments, is it a demerger? Yes or no? Yes or no? Yes or no? Uday, yes or no? So, pharma, the subsidiary has the manufacturing facility, subsidiary has the brand, subsidiary has everything. It's just that the holding company is just doing 1 crore of consulting and 1,000 crores is investment in the subsidiary and doing great business. That's what Aditya Birla case is. So, it was held that in that case, it is a valid demerger. So, I can do the business through myself or my subsidiary. If I do it through a subsidiary, it is still a valid demerger. So once this decision came, all consultants ran, now demerge investments, told clients, please demerge investments, Aditya Birla Nuvo cases in our favor. Would you still go out and do a demerger? No? Because common sense test would say that demerger would be business plus something. It cannot be only investments. Though this case law is there, but it can be overturned anytime. And it's going to go above ITAT to High Court and God knows where it will go. So I'm just trying to say, Smith got overruled for goodwill doesn't mean that you have a blanket thing to go out and do intangibles. This decision has come doesn't mean that you have a blanket to go out and do holding company demergers. Just be very careful, please. If you have done it in the past, use these decisions to fight your case. But to create these decisions, to create something new, is something which I would just caution you as you go forward. This is a very important thing. Did you realize that, write back of loans in IBC cases, what happens is you acquire an IBC asset, you write back loans. Is write back of loans in IBC cases taxable? Suppose if I buy a company and I do a settlement with my debtors, lenders. For 1,000 crores, I'll pay you only 100 crores, 900 crores profit. Is 900 crores profit taxable? Yes or no? Based on these decisions, no. Mahindra and Mahindra, there are a lot of cases which says no, it's not taxable. It's not income. It's not income. It's capital receipt, not income, not taxable. But now there's a change in 194R, which says money or money's worth. And it says that if you write back, there's a CBDT circular, which says if you write back an IBC debt, it is taxable. Now 28(4) has also got changed. So right now, the way the industry stands, 900 crores is taxable as income. So if 900 crores is taxable as income, how are the IBC cases happening today? Because the IBC cases, if you get a concession on 900, you have to pay tax 25% upfront today. So this is a very important change which has happened for IBC cases. Write back is taxable under law. How will this evolve? How will this work out is something which we'll have to see. That's why the bids are now getting lesser. So now you're seeing only 1 or 2 people have bid because a lot of people are not taking this chance of this taxability. They're saying, okay, till this certainty on this emerges, we will not bid because otherwise the whole write back will become taxable, which will become very, very draconian for the whole thing. Stamp duty. Have you assessed stamp duty on a complicated merger? Let's say I have a company in Bombay, I have a company in Delhi. Company in Bombay has properties in Tamil Nadu, Rajasthan, Punjab, Haryana, 8 states. Company in Bombay is merging into company in Delhi. Stamp duty is payable in Bombay. Stamp duty is payable in Delhi. Stamp duty is payable in all the other 8 states, depending upon where the properties are and how the law works. How does the set-off mechanism work? How does the interplay between states happen? And when you do the best and the worst case, set-off, milega, nahi milega, ye interpretation hoga, nahi hoga, fair value is this, fair value is that, fair value is face value, fair value is 11 UA value, fair value is market value, fair value is property value. All those answers, I see there's a delta of 10 to 100 in the estimation of best case and the worst case. And how do you take a decision? How do you take a decision? So I think when you're planning any merger, working out the stamp duty cost is the most important thing. Best case and the worst case. And please do not rely on consultants. Send your person to the stamp office, send your person to the 8 states. How will they look at it? How will they actually deal with it? How they have they practically dealt with the last 5 cases? Spend that 1 week to know where you stand. Otherwise, you can be brutally surprised on this point. Just be very, very conscious. You need to know practically how to get this done. There's a new law which came, round tripping. People familiar with round tripping? Round tripping says that Indians can own shares in a foreign company provided there are only 2 layers below that. So let's read the law together. No person resident in India shall make financial commitment in a foreign entity that has invested or invest into India at the time of making such financial commitment, resulting in a structure with more than 2 layers of subsidiaries. More than 2 layers of subsidiaries. What does it mean? Is 1 right or 2 right? I'm the Indian entity. Is 1 right or 2 right? What does 2 layers of subsidiaries mean? Is 1 right or 2 right? How many say 1 is right? 1 person says 1 is right. Is 2 right? I don't know. I really don't know. Conservatively, we are telling clients stick to 2. But we are hoping the circular will come and say 1 is right. Now, this is beautiful. This has come now. So this has come now. Round tripping is permissible now. What happens to all the round tripping done earlier? Is it permissible, not permissible? There are a lot of structures which got created on gifts, which I hear in the market. What happens to all that? Will that be litigated to be untrue? So a lot of your ED inquiries on FEMA is on international structures. Yeah, that is where I see the maximum. Where people have been clever, that is where the maximum stress is. Maximum stress. Commercial substance, absolutely, sir. There has to be a proper entity overseas. There has to be proper business overseas. There has to be a bona fide business. It can't be just investments into India. If you tell me that 80% is global world, 20% India, I can buy it. If you tell me 10% is global, 90% India, then again, you will get thoroughly investigated. So, my maximum queries are for people who have done this in the past on poor advice. And now, unwinding is also a fear. If you unwind, how do you unwind? How do you unwind? So, what I was thinking is that if in substance it's not permissible, please don't try and violate it on clever advice. That's where the maximum litigations start. But round tripping is now permissible. Now, I'll give you an example. अरे बाहर लिस्ट करेंगे, overseas लिस्ट करेंगे, ज़्यादा पैसा आएगा. So many people came up with different options of overseas listing. Now everybody is saying India listing is better. Because overseas, if you are less than 10 billion, you have no value. Whereas in India, if you are 3-4 billion, it's a big value company. So it's more recognized, more spoken about. So how do you inverse a structure which you've already created? One is you merge your overseas entity with India. You merge Mauritius into India. You merge US into India. You can't merge Singapore into India. You can't merge Netherlands into India. Then how do you do that? Then you will come and say that you have to liquidate the company. If you liquidate the company, there is taxes. Now, I had a crazy query which came that, I raised money at $1 billion. Now I will liquidate the company at $400 million. Will the tax office accept it? Will the tax office accept it? Why? By 3 months back, you raised it $1 billion. Now you're saying it's $400 million. Why? Just because you want to pay less taxes on liquidation, less taxes on capital reduction. So I'm just bring a logic test. If the business has changed, modified, if the business has collapsed, if there's a doomsday happening, I understand. But not just because it is, just because you feel that you want to pay less taxes. So this is another thing, that unwinding the structure, and in the unwinding process, inquiries start coming. Because then you'll file with RBI and everything, and then the inquiries start. You want to say something?
There have been a lot of instances where SEC has come harder on Indian companies listed abroad than the Indian regulators. So that's been one of the areas where there's been a lot of push from investigation perspective to come back to India.
So, very important. This is a very hot topic in a lot of decision making today, how to unwind this and come back. So clearly, you know, I'll just tease you with a law. This is a teaser. The teaser. When you sell shares on the stock market, you have to take your cost as on January 31st, 2018. If you demerge and sell shares, what cost do you take? Old companies cost, new companies cost, nobody knows. If you sell shares in an OFS, what cost do you take? When HDFC Limited merges into HDFC Bank, and then you sell HDFC Bank's shares because you're a HDFC shareholder who got shares of HDFC Bank, whose cost you will take, HDFC Bank's or HDFC Limited's? And there is no answer. I also don't have an answer. It's a big open area in law. We don't have an answer on all this. So this 31st January 2018, read with a restructuring happening in the company, please be very careful. There are two interpretations of everything. And there are no case laws on this, but there are two interpretations of everything. Is OFS taxable, not taxable? It's a very big debate. How will it be taxed? On book value, on indexed value, fair value? Very big debate. Very, very big debate. Section 79, I'll not got. So 281, obviously you have to get in transactions. When you're negotiating SPAs, tax withholding certificates, reps warranties, indemnities. Now, how do you deal with sale of companies which are into tax DDIT investigations? Like, how do you give indemnities? How do you give reps warranties? And that's why, you know, people are actually now doing demergers before sale so that the past remains in the old companies. And how do you do it? Because it's there's no time limit, 10 years, and people want escrows for it. And how do you deal with all this as you look at this whole thing? Treaty benefits, POEM issues, sitting here running companies in Dubai, sitting here running companies in Singapore, all that doesn't work anymore. In any M&A, it gets caught and in diligence is either highlighted as points. GAR, I will not speak. I think you'll have a session on GAR, not to worry too much about it. So really, commercial reason, very important in M&A. My just humble message to all of you is that what doesn't make sense, don't do it. What doesn't pass the smell test, don't do it. Though you may have a favorable case law, don't do it because that case law will be reversed if it doesn't make sense, clearly. Document what you do right, do your resolutions right, do your paperwork right, put substance over form in everything, and also clean up the past. The fear that, you know, if we clean up the past, I will be caught is a wrong fear. Rather than the regulator cleaning you up, please, you rather go and beg forgiveness if you need to. You rather go and seek an approval if you need to, regularize things. But don't avoid issues that, you know, I don't want to surface the issues. That's not a right answer in the present day. With this, that's all I had actually in the half an hour which you could manage.
No, we still have 5 minutes, Girish.
Yeah, sure.
You want to?
No, I mean, I just covered it.
We do have 5 minutes for questions or comments. Any, or people are still zapped and trying to absorb?
When the demerger gets blessed by NCLT, there is a point that income tax may not take it up.
No.
What is your experience on that?
My experience is all merger, demerger are taken up by income tax office. All. As a process, if you've done a merger, demerger, it is scrutinized. If it is blessed by the tax NOC, suppose if you get a tax NOC and you do it, the tax NOC also states this doesn't stop the tax office from doing any scrutiny it wants to do at the time of assessments. So yes, it is a comfort from your end that you look reasonably okay, but it's no surety, guarantee or warranty for anything.
Thank you, sir. Sir, is there a concept of ongoing concern in slum sale? I am from the Bajaj Group. Suppose a company is closed down for many years. So, honest transfer can be a term as a slum sale?
Very difficult. Now. So I get cases where, you have lockdown companies who are not functioning. Then suddenly they get up one day and they say, to transfer the losses, we'll do a demerger. So they'll say, okay, this business is getting demerged. It's not that I'm carrying on today, but I always intended to carry on. In heydays, I also did turnover. Suddenly you make it active and then say you are transferring a running business. It doesn't work. So you have to have running people, running contract, running revenue stream. Then only you can call yourself to be a business. To have a lockdown business and then say that I'm in business or business, and then say this lockdown business also a part of the business and now I'll transfer it, it'll start again. Doesn't work for slum sale.
Hi, I am Nishit from SKP. My question is on the demerger. So the challenge which a lot of companies are looking at demerging their investment arm, to say that this is my investment arm, and we feel that there could be a challenge in whether that investment activity or the investment treasury function which they are carrying on, whether that can be considered as an undertaking in itself to do a demerger. But suppose if you do a reverse, you demerge the business out of the company and the investment remains in the company, whether you foresee a challenge from the approval of the demerger itself, because...
No, that's a very valid way of doing it. That's a very legitimate way of doing it.
So no issues?
No issue in that. So suppose if Grasim would have demerged all their businesses and kept Aditya Birla below it, there would be no case law.
Girish, I get asked a lot of questions as to whether we should do a slum sale or a demerger. And from a practical point of view, because the NCLT now takes a lot of time for the demerger, I think so many IBC cases being there. What's your perspective been? You still kind of prefer a demerger or a slum sale, if especially
There are too many parameters. You can't decide this way, because do you need the money in your own hand or do you need the money in the company? If you do a slum sale, money comes to the company, you declare dividends, more tax goes. Whereas if you do a demerger, then money comes in directly in your hand. Then in slum sale, you can't create intangibles in demerger. In slum sale, you can create intangibles. Past remains in slum sale back with the company. In demerger, some past goes to the new company. So too many parameters, depends upon where you are doing. But clearly, if you want money in your own hands, then clearly demerger is a very important thing. But in today's environment where there's so much uncertainty, people do slum sale to close the deal, rather than at least hang the deal and lose the deal totally.
Last question, yeah.
Hi, myself is Manu from BDO. My question is related to ECB. So, in your experience, have you seen an ECB taken from a Chinese entity be written off by an Indian company?
I have know of cases where companies are getting questioned on Chinese ECBs. So I don't tell clients to take it, but if you have got it in the past, people are questioned on the source of money and so on and so forth. Absolutely be very careful. Very, very careful. Uday, you've seen how things are. You don't want to be... See, like when you look at the questions, you yourself realize that now, if there's an industry issue, like what you said, now I know financial service sector is totally under attack on GST. And if you take an aggressive GST position, you will have a problem. Now, we all know that all the Chinese manufacturers, all the ECBs from China, and then you still go and do a Chinese ECB to get that 1% reduction, you will surely have a problem, because that's not the hawa. What he said is, look at the wind where it is moving, and it moves in a cluster. That's what, and then you go against the cluster, you will create problem. To say 1 or 2%, you will regret.
Last.
Girish, on the round tripping, would it not be, the round tripping, the chart that you said, 2 options, would it not be fair to assume that the two level of subsidiary should be seen at the India level?
Yeah, I agree. That's the right interpretation. But today, till the regulations are not coming out with clarifications.
But foreign entities anyway outbound investment. That's how I'm looking at it.
Correct. We'll read it again together.
Any foreign entity should be outside from the RBI perspective. Anyway, it's an outbound investment.
We'll read it again together.
Yeah.
It says 2 layers of subsidiary. It doesn't say India subsidiary, doesn't say foreign subsidiary. It's 2 layers of subsidiaries.
This is lifted as essentially from the Companies Act, as I understand. This is outbound. That's what I'm saying. Yeah,
Yeah,
that's
so-
all.
Correct. No, what I was trying to say, Uday, is the law is nebulous.
Yeah, it's nebulous, absolutely.
It doesn't say India's appraisal. That's why, as an advisor, I will go with the most conservative view. Why will I land my client?
And
into
certainly
trouble?
you should have other than India business.
Yeah, exactly. Otherwise, so there is no case. It's using the treaty.
A big hand for Girish, please.
Thank you.
That is lunchtime. We've had 4 riveting sessions from the automated and responsible taxes, MNC taxation, current and anticipated trends, tax investigations, new norm, M&A. So if you feel you've been a little spooked in the last couple of sessions, have a nice lunch in the adjacent ballroom, and we'll be back with some solutions to the 2 pillars, the theme of the conclave, which is the OECD's 2-pillar solution. Are the pillars strong? So if they aren't, we'll strengthen them today. We have a wonderful, we have 4 wonderful panels now back to back. I'm sure you'll enjoy it. We'll be back at, say, 2:05, 2:10. Let's be ahead of time today. So far, we are on time. I hope you're all having a good time. See you back at 2:10. Thank you.